Oh boy, holiday weekend's behind us. You know what time of day it is. Time to get back to work tonight, right? Tuesday evening. It's already Tuesday evening. It's July the 6th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades for tomorrow. That's Wednesday's trading session. I get a great video in store for you guys tonight. Charts are all ready in the background. As you can see, S&P's ready, NASDAQ's ready, and you know the gold's always ready on our radar for tomorrow. Boy, speaking of tomorrow, got a bunch of great trades on my radar. We're kind of right knee deep in what I call the snapback trade. Monday was a holiday, had those big runs on Friday and Monday. We oftentimes see these big pullbacks, right? And we're kind of halfway through that snapback trade on the S&P and the NASDAQ. And I'll tell you, the gold might be setting up for that snapback reversal for tomorrow. So lots of potential buy setups as we try to go back to retest those highs. And you know, these markets are nice and volatile right now, so I got some great reversals, got some great failures, got a lot of great price action setups on my radar for tomorrow. By the end of this video tonight, not to worry, you'll know my favorite trades across my favorite markets for tomorrow. You'll also know some stuff to avoid to kind of keep yourself out of trouble tomorrow, whether you're trading on your own or whether you're trading with us tomorrow morning in our trade room. Now, before we jump into the video tonight, though, as always, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video every evening during the week with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so go ahead and subscribe. And when you do, hit that little bell icon, right? So you always get notified when I upload something new tomorrow night. And if you guys have any questions for me, drop those questions in the comments section. I'd love to answer all your questions, so don't be bashful. Drop those questions if you got them. And if you enjoy this video tonight, if you like this video as much as I enjoy making it for you guys every evening, do me a favor, hit that like button, that thumbs up button for me here. Always goes a long way to help us support this YouTube channel by subscribing, dropping those questions, and thumbs up if you guys enjoyed this video here tonight. But enough of the intro, though. Time is ticking. Wednesday is right around the corner. Like I mentioned, we are kind of knee deep in the middle of this, what I call a snapback scenario. And we're going to go into more details of how that works, especially on the S&P and the NASDAQ here tonight. And gold, again, might be knee deep in that right now. Now, it's not that difficult to see. The S&P and the NASDAQ both have some nice, strong bull runs going higher. So I'd love to buy some dips here on the S&P and the NASDAQ. We've also got some pretty hefty targets that are still waiting overhead. So if we don't get those pullbacks, I got some nice breakout trades on my radar for tomorrow. And, you know, we got some big news tomorrow morning, get a big JOLTS report tomorrow morning. So if we do see these things get shaken up overnight or a reversal, I've absolutely got some reversal trades on my radar for tomorrow, because one thing about these markets right now, anything is possible, right? You blink and the market can reverse right now. So love the volatility. So we'll make sure we're ready for both sides of that. Gold could possibly be the most difficult for tomorrow. We've got this big run down on gold right now, but there's this big range, right, overhead. Now, again, we're going to talk about the snapback idea here tonight. The holiday session low is right down there at 84.7. So there's a good chance that we end up back inside that range tomorrow at some point. The question is how do we get there, right? Do we just run? I've got a plan for that. Do we get that double bottom reversal, or do we punch and then turn? So there's a couple different scenarios I want you ready for on the gold. So make sure you stay tuned for the entire video so you really get the best stuff on what I think might be the most difficult market as we go into tomorrow. Now, speaking of tomorrow, get a bunch of, not a lot of news. We do have quite a bit of, the news we do have is important tomorrow. Let's grab a look at the calendar here first of all. Tomorrow, of course, is a Wednesday. It's the 7th day of the month of July. And usually this second week, this second week of the month. Usually second week of the month is relatively quiet as far as news goes, but we've got some pretty good stuff coming our way because, of course, the reopening of the economy. And, really right now we're kind of testing these vaccines, right? Everybody's out and about right now. All the big countries that have been highly vaccinated. This is going to be an interesting week this week. So we'll definitely be watching in for any headlines, especially coming out of the CDC, coming out of the Fed, right? Anything that might lead us to believe that rates might be getting raised sooner or later, right? As we see more developments. As we look tomorrow, there's a lot of big news. Again, not a lot of news, but the news we do have is important, right? Tomorrow, of course, being that Wednesday trading session. The JOLTS report is probably the biggest news report tomorrow in the morning session at 10 o'clock Eastern time. Now, you probably have heard me say many times before, if you tune in to watch this video every night, we tend to see our best trades in our trade room between 10 o'clock and 11 o'clock Eastern time, Monday through Friday. So this will be a great little, a little shock to the system tomorrow. The JOLTS report. Now remember, everybody's watching the jobs market right now because we know about inflation. Inflation is supposed to be transitory. The Fed is happy with that. The jobs market though, right? Remember, that's the JOLTS report. The job openings, layoffs, and transfers survey. I'm not going to go into all the details of the actual report because honestly, the report itself is pretty much irrelevant. It's how the market reacts to whatever we get tomorrow at 10 o'clock. So I'm not an economist, and honestly, even if I was, it doesn't really matter. All that matters is when that news comes out, how does the market react to it? And we're definitely looking for a potential big market reaction. And then let's not forget, the FOMC minutes are also at 2 o'clock tomorrow afternoon. Now, again, everybody's looking at, will they raise rates right now? The Fed is obsessed with inflation and jobs because they're trying to time kind of pulling back the stimulus so they don't rev the engine too much on our economy, right? It leads to too much inflation. It leads to bigger problems. So the Fed tomorrow, those meeting minutes are going to give us a glimpse into that big announcement we had 2 weeks ago where they started talking about raising rates. If it sounds ridiculous, it is that ridiculous, but that's how obsessed these markets are with inflation, jobs, and rates. So that is another big report for tomorrow. And again, what the actual FOMC minutes are is irrelevant. All that matters is how the market reacts to it, right? We're not going to trade the news. In fact, I won't even read the darn minutes. I'll just watch the price action and trade what I see on the chart. So those are going to be the big news events tomorrow morning, and really, overall tomorrow. That big report, though, at 10 o'clock Eastern time is definitely one you want to be at your desk for. Now, don't forget, we're going to be in the trade room tomorrow morning and every morning at 8 o'clock Eastern time, Monday through Friday. We'll be here all week this week. I would love to have you trading right along with us. I'll put all the membership links you guys need below this video, either in a big button below the video or in a link in the description of the YouTube video. Grab that link, hit that button, come get registered, and we'll trade that reaction tomorrow morning in our trade room. Now, back to our charts here, and we'll talk more about the rest of this week's news here because we got the jobless claims coming on Thursday as well. We'll talk more as far as news strategy goes a little bit later on in this week. Back to our charts, though. S&P's all here, NASDAQ's here, and, of course, gold is here. The S&P and the NASDAQ are very similar, but they are a little bit different. Let's start first with the S&P, right? One of my favorite markets, the E-mini S&P 500. And let me kind of set the table for you here because I've talked a lot about what we call the snapback. And ultimately the snapback, and we'll find out who the veteran newsletter watchers are because we talk about the snapbacks anytime we have a holiday weekend. So what happens is, and of course we had kind of an interesting weekend this weekend because the markets were open the entire time, right? The holiday was on Sunday, the 4th of July. The Independence Day holiday was on Sunday. So we pretty much had a holiday Friday, right? Kind of a holiday low volume Friday. We had that beautiful jobs report that sent the market higher. And then, of course, we had that very small, very low volume Monday trading session. This was all lumped together in what is considered to be the kind of the holiday move or the holiday session. Now, remember, the futures markets are traded electronically, right? This is not the New York Stock Exchange. This is the CME Exchange, right? These markets are rarely ever closed. They're only closed a few times a year, right? That's why I said last week, you can trade the holiday. Just be careful because it is relatively low volume. Well, so we get this big move over a holiday session. While most traders are barbecuing on the boat or at the beach or doing whatever they do on their holiday break, the market, of course, is ripping, right? Maybe not ripping, but it was slowly melting up here, right, on Friday into a range on the following Monday. What oftentimes happens is the markets will come in on that Tuesday now, right, after the holiday weekend. They'll look at this and say, what? No way. This is too high to buy. And they'll basically reject, right, the idea of buying at such a high price. What happens, which is always very remarkable, it's always a very cool thing to watch, and we had a front row seat this morning in our trade room. What happens, though, is the market will oftentimes make a very significant reversal, almost as if to go back and say, yes, that's much better. I like this place, right? I like this price. It's almost like, hey, let's go back to where we would have been if there wasn't a holiday, and let's get back to work right there. This is kind of where I have what I call the snapback, right? The snapback. It kind of snaps back. It pulls back, right, to that, what is usually the holiday session high or low. In this case, it was a move going higher, right? So it was the low of that holiday session. So, and then what happens is once the buyers come in and say, oh, thank goodness, now I like this price. Now let's get the party going. Now let's go back up because now they have this wide open, obvious retest of that high now, and that is that completion of the snapback. Now, you're going to see this kind of unfold across most markets whenever you have like a Friday or a Monday holiday when you come back the day after. And it was kind of funny because the market opened up, right, in kind of a range today. They had that little spike right at 9:30 and then just tanked. And once we saw the breakout going lower, it was like, oh, this is obviously one of those snapback scenarios. So knowing that is kind of the situation, I don't want to go too far down that rabbit hole, but that is a big part of the gold, the NASDAQ, and of course, the S&P. The buyers have control of this market right now. They did get that strong bear move down. They took out what is obviously that prior all-time high. They went a little bit overboard, right, off that holiday session low. And the buyers, of course, really get a nice strong, right, bull reversal, right, going higher. So the buyers have control of momentum. Whenever we have a bull market trending like this, I like to use channels. And I like to buy pullbacks. And so what I'd love to do right now in the S&P is I'd love to buy a pullback on this. If the market does run higher, we know where the market wants to go. If the market does go higher, I think there's still plenty of options to buy pullbacks here. And then we might get lucky and get that reversal, right, towards the end of the session tomorrow. And we also may end up getting stuck inside that range. You know, one thing you notice about a day like today is when you get a big, you know, when you have a day where there's a really big range today, oftentimes tomorrow ends in some sort of small range, right? So big, wide range today. Think about a smaller range finishing tomorrow and vice versa, right? If you see a small range today, a big day is likely coming very soon as well. So how do we buy it? How do we sell it? And how do we kind of trade the, potentially some reversals here? Now, as I mentioned earlier, I'd like to buy a pullback. And what I'd love to do is combine the low of this channel along with kind of that low or that low. So couple options here. We really have what looks to be like a potential for a bear trap into a failure into a pullback combination. Now, I'm using a lot of terminology right there, and I do apologize if you're watching for the first time. We have a quick start video class here on this, not on the YouTube channel, but on our website. What I'll do is I'll put a little button up top there for you that'll spit across there for our quick start class, where I'll go over how we find the levels of support and resistance, all the charts to use, the indicators I'm using, how to find the levels, and most importantly, we talk about kind of these three patterns, right? So trap entry below that low, failure pattern off the moving average, pullback pattern on the first pullback as we go. Again, think about now the market racing higher, shallow pullback. Everybody wanted that pullback. If it comes back to that same spot again, that's a great place. Look for a nice strong signal candle and buy that trap. You have all of this momentum going higher here. The odds are very, very good. We get that pullback and we get another leg in the same direction. So what I like to do is get that trap entry off of that low. And then what oftentimes happens is the bears will come in. They'll try to sell this pullback, right? But the market is so bullish that oftentimes that pullback fails. We can buy right into stop losses with a failure pattern. And then you know me, I love that follow-up, right? That failure into pullback combination, right? These combinations are very, very common across all liquid markets. So again, you've got a trap low, a bear trap, a seller failure setup, right, and a pullback setup. Now, please remember, I don't rely on indicators to trigger any of these entries. If you want to get in too late, then rely on indicators. I trade just off the price action and this moving average. And again, I cover all of the, again, kind of a shortcut to bring you up to speed. I cover all that in that quick start class that I'll link up there in the upper right-hand corner. You definitely want to check that out if you want to make the most of our time in the newsletter, or right, if you want to be using it on your own out there tomorrow. So got that all covered there. Now, be aware, we may not get that trap if the market was to pull back even deeper here. Let's say we get a deeper pullback now, right? We run down into this area. If that happens now, what you want to do is now treat the bears with a little bit more respect. Let them try once, let them try twice, and once you get those two tries, and again, remember, this is because the bears will really pull back strong, right? If they really pull back strong now, let those bears try a couple times, and once they do, their stop losses are sitting right above that high. Now, between you and me, I like to draw a trend line off of that low. There are two ways to buy this thing. One is you can buy that rising support trend line. That's my favorite. That always gets you in the best lowest price, or you can buy right into those stop losses. Again, it's a failure, but because the pullback is stronger now, we like to respect the momentum of those bears, let them try a couple times. We call these two try failures. Now remember, in this situation, the target is still way back up at that high. What you oftentimes see in these deep pullbacks is the market will really snap higher, and you can grab another trap entry as like a little cherry on top there before you make a retest of that high, right? So you're buying off the trend line, you're buying into stop losses for those counter trend sellers, and you're buying that trap on the way up to retesting that high. Now, I'm sure you're wondering, well, at what point does the pullback become the reversal? There are two types of reversals I'll be looking for as we go lower. One will be the 1, 2, 3 reversal, right? If we hold that pullback and jump off the moving average, right? It's basically a 1, 2, 3 move where we see a strong jump off the EMA. If we get that, now the bears take control. The bears want to get down to retest that low. That's their objective. We don't want to chase it. We want to sell the first pullback off the high of this channel. Now, keep in mind, this is a 5,000 tick chart on the S&P. I'm not going to be trading off a 5,000 tick chart. What I'll do is I'll drill down to a faster time frame, a much faster price action entry time frame, and my two favorite price action setups are going to be failures and traps. to sell off the high. Now, I'm not going to go into all the small details, the time frames, the indicators, the entry setups, but I do cover all that, as you can imagine, right, in that quick start class I talked about earlier. So grab that link in the upper right-hand corner, get registered, and you'll learn the entire strategy there. That way you'll know what I mean when I say 1, 2, 3 reversal, right? The first test is always the best test, or you always want that first pullback right off of the high. We may see, and there's lots of variations for this, the market may crash lower, and if it crashes lower, I'll look for a two-try trap entry, right? If the market was to really crash lower here and not give us that 1, 2, 3 breakdown, I would simply look for a trap entry. It'll be just like this one. Right, so imagine we get a big move down, shallow pullback, lower low. That's exactly what you're looking for, right, over here as well. So pretty not maybe not simple, but pretty straightforward as this market, right, rolls lower. Now, what if the market runs higher? That's kind of the challenge, right? What if we run higher here? If we run higher, what's my concern? It's not momentum. We know who has control of this market at that point. What's my concern? I'm buying high, right? That's the problem. We're buying high. So if the market does run higher here, what's my favorite setup? Traps, right? Traps are always going to be my go-to entry pattern. Again, don't worry about divergent signals, right, or MACD crosses or hooks or Bollinger Band snaps or all those indicator signals. If you want to get in late, then use indicators. If you want to be in with the rest of professionals out there, use those price action setups I talk about in our quick start class in the upper right-hand corner. Imagine now a strong run up, a shallow pullback that barely pulls back to the moving average, a higher high in price. It will drive the buyers crazy, and at that point, that trap low becomes a beautiful entry. Now, one of the things I like to do is I like to look for hidden channels coming in off of those highs and off of that low. So as we go higher, I'll be looking to draw trend lines off of these highs and connect them off that low and see if I can really get some good entries off the low of that, right, of that channel. I should also mention too, like I mentioned in the intro, we may see this market race higher, give us that trap entry, take out that high, and then pull back and do it again, right? And do it again. The way that it would do it again would be where you've got all this momentum going higher here, we pull back, we're now below the moving average, and you got it, right? Seller failure, right? Failure into pullback combination, just like I talked about back here, right? Failure, pullback, just the same pattern, right? We'll just put it up above those highs. Remember, if you have enough momentum, it doesn't matter if we're at that high. That pullback will still get bought. It's still a very reliable trade, and I'm looking for that as we go. And then if we take those highs out, if we get that pullback, we retest the high, that's exactly when we start looking for the buyers trying once, the buyers trying twice, and we can short that sucker, right, with that two-try reversal, right? So imagine, right, strong move up, we get that deep pullback, we retest the high, buyers try a couple times. Again, we use that same basic two-try failure we talked about back here, right? But now we put it at the highs here. We'll look for that short coming down. All right, some of my favorite trades for tomorrow. There will definitely be more than this. There will definitely be more than this. I'm just trying to keep it simple and give you guys, right, some good hits to look forward to for tomorrow. We will definitely be looking for a lot more than that tomorrow, of course, in our trade room. I just obviously can't anticipate everything here on this video. So again, tomorrow morning, 8 o'clock Eastern time, we're going to break this down no matter what we get with all the members in our trade room. How about some NASDAQ now? Now, NASDAQ, you'll notice, is very similar, but it's definitely a little bit different, right? You can definitely see the NASDAQ is very different. Let's now knowing, right, kind of what that snapback scenario looks like. If you go drilling out here right now, you can kind of see what's going on, right? Now, I will definitely say the NASDAQ probably did its best to pull back right now, but that huge move they saw on Friday combined with that big move up today, I mean, they did a pretty good job at giving us, again, it wasn't as good as the S&P. The S&P went all the way back, right, to its Friday morning lows. The Nasdaq obviously didn't get anywhere near that. In fact, it barely got those all-time highs. The Nasdaq is obviously not the S&P, right? It has a mind of its own. And a lot of this right now is being fueled by that recent decision at the Department of Justice regarding Facebook, right? That antitrust stuff. So a lot of that, I'm sure, is fueling this. These tech companies are a little bit bulletproof right now. It's not really relevant, though, right? We know right now we're kind of in that snapback, right? We're kind of in that snapback environment right now. We had that big move up, right? Well, a lot of people were on vacation. They chop around sideways. They get that really deep pullback. The buyers come in, say, oh, thank you. Give me something I can afford down here, right? They get in, and you can see everybody is in on this, and it rips higher. Not exactly as perfect as the S&P snapback example, but very much fits the bill. It fits the tone of what a kind of holiday weekend oftentimes will give you. Now, you'll notice we've got the bulls well in control right now. There is no doubt about that. We have the high of day from today, that 14,790. That's got a big old bullseye on it. The buyers would love to get back up and retest the high. And I've also, you'll notice here, that range right in the middle. I've measured up the amount below the range. Okay, this is the king of all snapbacks, right? So we see the big push down below the range. Ranges are balanced areas on the chart. So when we have a trading range and the market goes below the range like that, it's usually not going to stop right inside that trading range. It'll usually pendulum swing all the way back in the opposite direction. So we have this momentum. There's just no doubt about the momentum of this market right now. And of course, right, I want to be a buyer at a support level, ideally, in this type of market. Now, the hard part right now is we have that range right in the middle. That's one big difference between the S&P and the Nasdaq, right? The S&P, if you recall, the S&P is the range all the way up at the top. So it's easy to think that magnet will drag it higher here. In this case, the range is right below us. So when I see stuff like this, you know, first of all, with all of this momentum, any pullback is going to be seen as a buying opportunity. The difficult part is as the market pulls back, we want to really try to be careful looking out to see if this range really is starting to kind of get its hooks into this market here. Chances are a pullback on this thing will be safe because we have such good momentum going higher. So a lot of this is going to be a little bit like the S&P, right? We've got support levels below. I've marked up that channel high. I'm marking up that channel low. I think this area right there is probably where the best entries are going to be waiting. That'll put us just below the low of that trading range. If I had it my way tomorrow, if I got what I wanted tomorrow, I would use that trend line and get a nice deep pullback with one of those two-try failures. I think that's where the best entry is probably going to be there for tomorrow. If you're a client of mine, you know how much I love these triangles, right? You're almost going to think about that as like an expanding triangle. So we go up, we pull back. Like that's where I would think the best entry will be for tomorrow. I'm going to take whatever the market gives me. That's all we can do, right? All we can do is take what the market gives us. So as we pull back, right? As we pull back, the key is you want to anticipate now, as we pull back right now, anticipate those bears coming in and trying to send this thing lower. They have a pretty strong move going down, right? So the bears will come in, they'll try to get short, and once they do, their stop losses are just sitting targets. We can buy right into those stop losses for an easy snap back up to retest the high. So the short-term pullback, right? That short-term pullback, I would love to get, below that low. I'm not so keen on a trap like on the S&P, right? The S&P looks great for a trap. This one's right inside the range here, so it's not as desirable as the S&P. But if I can get those bears to come in, get them to commit off the moving average, then I can go in, I can take a look, okay, where are their stops? And I can simply buy into those stop losses. And then if I can get lucky on this, I can grab that pullback right off the moving average. Again, these are very common. Failure into pullback combinations. Now I'll tell you, I have probably 100 examples of the failure into pullback price action combination. I have probably 100 examples at this point now in that quick start trading class. It's not just a class, right? It also gives you examples of what they look like and how we apply them on our favorite markets. That way it makes it easy for you to learn them and apply them on your own. So again, grab that quick start class in the upper right hand corner. What I really hope we get tomorrow is I'd love to get that deeper pullback down into that, again, kind of an expanding triangle low. Use the range as a magnet still. We have all of that momentum. So if I can pull back nice and deep here, my concern is what? Location is great. But if I can really deep pull back, what do? We have to really respect the sellers, because the sellers are not going to give up without a fight this time, right? They're not going to give up very easily. They're going to try once. They're going to try twice. And again, think about that trend line. Think about the stops, right? Where stops are above those highs. And remember to keep your eyes on that trap, because those traps, I'll tell you, they're just a great way to add a couple more contracts on. So again, it's a failure, right? It's a 2-try failure off a support level in a bull market. It's a 2-try failure off that trend line. It's a failure buying the stop losses. It's a trap. It's a bear trap on the way back up to retest the high. Why? Because traps are your best option to avoid buying into resistance or selling into support. So these are two really, really great setups. If I had it my way tomorrow, that's what I would get, right? If we get that pullback. How do we reverse? Reversal here will be not easy, but the key to a reversal is don't try to predict it. You will lose more money trying to predict reversals than being stung by the reversal altogether, right? What's the old saying? More money is lost by trying to avoid a market correction than the market correction itself. So I'm not a big fan of trying to predict reversals here. Again, if you have enough momentum in one direction, it's very likely we retest these highs here, which is why I'm looking for that pullback, failure, and a snap back up. But as always, keep in mind, if we do get that deep pullback, if the bears are successful, right? They don't try a couple times and fail. They hold that pullback and they go. Remember, the key is it's not the strong pullback. The pullback is irrelevant when it comes to the reversal. It's the strength of the market as it jumps off the moving average. These are 1, 2, 3 reversal moves, and you know me, right? The first test is the best test. I want to drill down to a faster time frame. I'm going to grab those bull traps, those buyer failures. Failures oftentimes lead to pullback combinations. Again, this is a 4,000 tick chart. I'm not going to trade off a 4,000 tick chart. That would be the stop loss will be way too big. The volatility is too big. I'll drill down to a much faster time frame and I'll find those entries 1, 2, 3 reversal into hidden channel pullback. And again, I'm looking for a bull trap, a failure, a pullback combination as we come off that low. And I talk about those pattern setups again in that quick start class in the upper right hand corner. Where is my target on that? Back to retest the lows, baby. Easy, right? You know where it's going. Now, again, as I mentioned on the S&P, if it just collapses, right? Let's say it just collapses, for whatever reason. If it collapses and runs, keep your eyes on that strong move down, shallow pullback, traps, baby, right? Say it with me there. Strong move, shallow pullback, lower low in price, traps, baby. That's the trick. That's the key. That's the setup you want to look for if it just dumps, right? If it just kind of pulls back and goes, right? That's a 1, 2, 3 reversal. Okay, find the channel, go. But if this thing just falls out of bed here, big strong push down, shallow pullback drives the bears crazy, right? Then you trap high, that's the one you want. That's a great setup. One of my favorites in our trade room. In fact, we found a couple this morning on the S&P, right on the way going lower. So got that quarter going lower there. Great spot for that target. Now, as we go higher here, right? As we go higher here, what's the plan as we go higher? Well, we know where the market wants to go. We know it wants to get up to retest the high, and we know where the pendulum swing is. Probably the easiest thing right now would be if they pull back and go higher from there. I'm going to mark up that new high, find my new channel, drill down to a faster time frame, and get aggressive, right? It'll be a trap. It'll be a trap entry, a seller failure entry, right? We'll pull back, the buyers will jump, we'll find that new channel, we'll get underneath the moving average, the bears will get caught looking short. We know where their stops are, failure, pullback, combination coming off that low, right? I don't need to repeat myself, right? But that's what trading is, okay? We don't like reinvent new setups every day. All right, if you're looking for variety, trading really isn't your game. We do the same thing over and over and over again. Yeah, the markets are different every day, but we apply the same system because once you find what works, why would you change it, right? Why would you change it? Pendulum swing, of course, right, is that target. That's the way the markets work. Now, mentioned earlier, we may see this market, right, pull back, retest that high, and then look for buyers once, buyers twice, right? Draw that trend line and that short back there. That is something that will definitely work for tomorrow. Again, I'm not going to try to pick the reversal right now, but I'll be looking for that pullback for sure. And then once they get that pullback and they retest the high, buyers once, buyers twice, and then back down where? Into that range. Right, into that trading range. Or let's face it, it may just punch, right? Go to the highs up there. We find, of course, now as it goes higher, we find a new bull channel. We grab that, right? We grab that two-try trap, and we're buying off the low of that channel. You can see, again, there's a lot of ways we can work this right now. There's a lot of stuff I won't be able to anticipate here on this video, and we'll do it together, obviously, tomorrow, right, in our trade room. So some food for thought there for you guys on the NASDAQ here tomorrow. Really excited to see what we get here on the NASDAQ. Hopefully we get that nice deep pullback that I mentioned before. Next up here, how about some gold? Let's wrap things up here on the yellow metal. Now, gold is, like I mentioned earlier, as I kind of warned you earlier, it might be the more difficult of the markets here for tomorrow. What is the key takeaway here? One key takeaway, you can see, right, this is that holiday session low. Right? There's that holiday session low. Now, the S&P took out that low. The NASDAQ didn't come anywhere near it. The gold, you can see, right, isn't finished. It definitely hasn't taken it out yet. Is this, that's kind of the question right now. Is this the snapback? Is this as deep as they get it? It definitely could be. They took out today's low, right? So they took that low out. This definitely could be all they get. But you know what I'm seeing? Big, strong push down. Anytime we see a big, strong push in one direction, what do you expect? Another leg in the same direction, right? Now, this is the overnight session, right? We'll see how Asia looks when it opens up here. But I wouldn't be surprised if we do see one more leg going lower here to take out that holiday session low and then get that bounce running back up right into that range there up overhead. So again, kind of touching on the snapback idea, you've got that holiday trading session, right? Holiday session, looking for that deep pullback, right? And then potentially back up we go from there. This may be the deep pullback for all we know right now. So we may end up just snapping higher here. And then there's one more kind of variable on this that you should be aware of. If you zoom all the way out on this gold, you'll notice I've got this marked up, this range magnet down here at 1778.5. You'll notice this is that big, just monster range that we saw that pretty much dominated the last half of the month of June. Anytime we have a range like that, that range is a big magnet. So as you can imagine, if the snapback doesn't exactly play out tomorrow on the gold for whatever reason, we get the Fed minutes tomorrow afternoon, we may see this thing continue and make that run into that range magnet. So I'll tell you, we really have a lot of great kind of space to work with on the gold. I think the big problem right now is we've got this big bear move down. If I want to be a buyer on it, I've really got to kind of stay patient on this and see where we go here in the overnight. Now, I've got my range overhead as a magnet, my range below as a magnet here. How do we trade this stuff? How do we trade this? Let's do the up, down, sideways, and we'll kind of break this down so you're ready for no matter what we get here for tomorrow. Now, if the market runs higher, it's an easy trade. You can buy that two-try trap. If the market runs higher, that's going to be the best trade by far, right? That two-try trap running higher here. Again, think about a market running higher, shallow pullback, higher high in price. What is it again? Traps, baby, right? Traps, baby. That's the same setup right there. Imagine now over here. Okay, that will be a great one. And then if you really get lucky, you can draw a trend line right off of these highs, mark it off that low, and combine that off that low. Extra bonus points if you can combine a channel with the entry. You don't really need the channel, but I'll tell you, it certainly doesn't hurt, that's for sure. And where's my target as the market goes higher? The target is back to retest the high. Absolutely, right? The whole snapback idea, right? Back up to retest the high there. We may also see this pattern up a little bit higher too, so don't be surprised if it really jets and we get that trap going higher here. How do we sell this market if it runs higher? If we do get the market now to run higher, there's going to be one big kind of key problem here, and that will be there's a trend line coming up right off of this low. So if we do see this market run higher, it may grind up this trend line here. It's one of the best parts about the buy side as we go higher here, right? That trend line can be used as we go. The moral of the story, though, is if they do pull back and want to go lower, we're going to have to respect the bulls. The bulls are going to be all over this thing if the market pulls back here any further than this right now. And to sell this, what I want to do is I want to anticipate those buyers, let them try a couple times. And one of my favorite entries on these types of trades is to draw a trend line off of that low, draw it then off of that high, and short that pop, right? That trend line top. Another bonus kind of entry would be a trap above that high, right? The reality, though, is the most important thing you want to remember is if we pull back here, the buyers are most likely going to jump all over this thing. That's why I think the easier trade will be that two-try trap, right, as we go. But again, there's a big move down. That's a big move down. There's no doubt about it. So if we do pull back right up into the sell zone, you want to wait for those buyers now to try once. Buyers try twice. Their stops are sitting right below that low. You know those stops are gasoline now, right? For those buyers' stop losses are fuel for that next leg, which we anticipate because we have such a strong move down here. Again, one of my favorite entries is to draw a trend line off those lows, up around that big high, and short that high. So you're shorting off the top of the channel. If we don't get the channel, you can short confidently into those stop losses. The target, of course, is back to a retest low. And I think if you have an extra contract, leaving that runner down to that 1778 would be a fantastic job, right? So quick target off at the low of day or low of this move. And then, of course, right, that final runner target back down into that trading range. Now, what if we don't get that pullback, right? What if the market simply bleeds lower here? If it bleeds lower, what's my concern? My concern is not momentum. Momentum is very bearish if we do go lower. What's my concern? Location, right? We're down around these major lows. I don't want to sell that low down here. So what do? You wait for a trap. You wait for that strong move down. You wait for that shallow pullback that drives the sellers crazy. The bear, right? The bears get confirmation on that lower low, and you hit them right where it hurts, right? You wait for that pop, and you get those traps as we go. Same idea as we saw going higher there, right, as we go lower. Another variation of that would be if the market took off the downside on strength, I could then mark up that low, mark up that high. I like the trap better than this one, though. We break up, the buyers try to buy the pullback. We're selling off a failure into pullback combination. That is possible. That is definitely potential. What I would want to see for that one, though, is I'd want to see it really make a run, right? Really make a run there. Then I can mark up that low, right? I can wait for that pullback, kind of that pop and pullback, right? They pop lower. They push back all the buyers. They pop it above the moving average. The buyers come in, try to get long, right? We of course, have that strong move down. Anytime we see a strong move in one direction, it's almost a guarantee we retest that low. It's that price action failure setup I keep talking about off the high of that channel, right? So a really, again, should be pretty easy if we can get that strong, right, push lower here. Now, don't be surprised if we take out that holiday low. We get that, right? We get that next leg lower here, and then all of a sudden, the bears are struggling. They're trying once, they're trying twice. We're drawing that trend line. Stops are sitting right above that high. Bears are gasping here for air. They're running out of ammunition, and now we can start looking for that long side trade, right, going back up in the opposite direction. Think about what this will accomplish. Think about what that will accomplish. The bears, they've got all of that momentum. Let them take out that low, right? Let them take out that low. Good for you, bears. Now, show me you mean it. Show me you really want to keep this thing going. Give them a couple tries there. Once they try a couple times, again, my favorite entry is buying off that trend line or some support level down there. But we oftentimes don't get that trend line support, and you're buying right into stop losses. Then keep in mind, you almost always see these reversals rip, right? Because all the bears are stuck short. We get that short squeeze, and what happens? Traps, right? One of my favorite entries is that failure into that snap back up in the opposite direction. Again, we're not trying to predict the reversal. That's a rookie's game. Don't try to predict anything. Let the market confirm for you what it wants to do. Give those bears the respect they deserve. They have control. Let them try a couple times. Then once you start seeing them, right, start to gasp for contracts there, now you can start to hit them where you know it hurts, right? Buying right into those stop losses. And again, don't forget, mark up that high, mark up that low, extra bonus points for combining off the low of that channel. Where's our target now going higher? Our target's right back up into that trading range to complete that snapback. Now, I'm sure there's something here that obviously I missed here. For example, we may end up running lower, going sideways down here, right? If it turns into a range down here, what do you do? What do you do if the market tanks and then goes sideways? Because again, it's a pretty big range today, so we might see a small range at some point tomorrow. What do? You mark up prior levels of resistance. You wait for price to pull back. We wait for those buyers, all those poor buyers, to come in and buy that pullback, and we sell right into those stop losses, right? Whenever we see a range on the chart, we ask, what direction is the bias? In this case, it'd be a bear bias. We then find levels of resistance overhead. As I mentioned earlier on the NASDAQ, I like those triangle levels, right, around the edges. We'll talk a lot about that in that quick start class. I mentioned the upper right-hand corner. Ranges are very common these days, right? So you want to find those levels of resistance. And then once they get up around those areas of resistance, just wait for those buyers to come in and get in on the wrong side of the market. We're not a reversal market yet. We haven't seen exhaustion yet. The range, of course, confirms the move. The range is a magnet. You don't want to buy that, right? You want to wait for those buyers to buy it and then sell right into those stop losses with those failures. So guys and gals, again, we'll cover more of this tomorrow morning on Trade Room, but hopefully this gives you some good ammunition of what to look for tomorrow. You know my favorite trades. You also know some of the stuff to avoid here tomorrow as well. Now, speaking of tomorrow, don't forget, 8 o'clock Eastern time. Boy, we're going to do this together tomorrow. We'll be here all week this week here. The holidays are behind us now. The next holiday isn't until, Labor Day, I believe it is? Yeah, first weekend in September. So you're stuck with me Monday through Friday until we get to the finish of the summertime season. I'm kidding with you. I really do enjoy summertime trading. I would love to have you there, right there with us. So grab that link in the description of the YouTube channel, right, or the YouTube video. Again, I'll put a big button for you below this video tonight on the trading blog. Grab that link, grab that button, come out and trade it with us tomorrow morning at the opening bell. I'll put all of the, all the contact information in the description. Or don't forget, you can always call the office. I'm always here to help out, so don't forget to call the office. I got live chat on the left, live chat on the right. You can drop questions if you got them in the comment section below, and I hope by now I've earned at least a like on the video, maybe a subscribe to our YouTube channel, because as you can see, I'm not messing around here every evening on this nightly newsletter. Guys and gals, how did I do, right? How did I do? Leave me some feedback in the comment section. I'll see you tomorrow morning at the opening bell. If not, we'll come back and do it again tomorrow night, and we'll have a brand new opportunity to review, and we'll do it all again tomorrow night as well. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.